Have you ever been watching a chart and all of a sudden the price just explodes? And you're left thinking, man, how could I have seen that coming? Well, that's exactly what we're going to dive into today. We're going to break down a really straightforward strategy designed to do just that. Catch those huge moves.
It really is the million-dollar question in trading, isn't it? How do you get in on those massive, game-changing trends? Turns out, the secret isn't some complex algorithm. It's about learning how to spot one very specific event happening on the chart.
And that event is called a breakout. It's that moment when the price finally smashes through a key level that's been holding it back, either above or below. Think of it like a dam breaking. Once it goes, a powerful new trend is often unleashed, and that's the wave we want to ride.
So if we want to catch a breakout, we first have to spot the setup, and that means looking for patterns. But here's the thing, and I mean this. This is where most traders make their single biggest mistake, right at the very first step.
I'm sure you've seen these before in trading books or online. You know, you've got your rectangles, your triangles, pennants, wedges, all these neat little drawings that are supposed to predict which way the price will go. But the problem isn't the patterns themselves, it's how people try to find them in the real world.
And this slide just nails the difference. On the left, you've got the wrong way to do it. Staring at a messy, real-world chart and trying to force it to look exactly like a perfect textbook picture. It's so frustrating, and honestly, you'll almost never find a perfect match. Now, look at the right way. You just ignore the name, ignore the perfect drawing, and focus only on the key levels, the floor and the ceiling where the price is bouncing. That's it. That's the only thing that actually matters.
So here's the big insight, the thing I really want you to take away from this. Forget the names. Seriously, it doesn't matter if you call it a triangle, a rectangle, or a sideways bouncy thing. All that matters is that you can clearly identify the boundary lines that are squeezing the price.
Because at the end of the day, every single one of these fancy patterns boils down to this one simple concept. The price gets stuck, it consolidates, it forms those key levels we talked about, and then it breaks out. If you can spot that, you can trade it. Simple as that.
Okay, so you've spotted your key levels, you're watching the price get squeezed, but just when you think it's go time, you come face to face with the next big challenge, the false breakout. This is the classic trap that catches so many traders who jump in just a little too early. Let's talk about how to sidestep it.
A false breakout is every bit as frustrating as it sounds. The price just pokes its head above that key level, it gets everybody excited, they all pile in, and then, wham, it snaps right back down, stopping everyone out for a loss. It's a classic move, but thankfully, there's a simple way to avoid getting caught.
The solution comes down to one word: confirmation. Instead of jumping on the very first tiny little tick that crosses the line, you wait. You wait for a clear, undeniable sign of power from the market, and that sign comes in the form of something called a momentum candle.
And what are we looking for exactly? It's really straightforward. A momentum candle is either one single big, powerful candle that closes way outside the level, or it's a series of strong, medium-sized candles all pushing hard in the same direction. Either way, it shows you that there's real conviction, real power behind this move.
All right, now we get to the fun part, the actionable stuff. You've spotted your levels, you've waited patiently for that momentum candle to confirm the breakout. Now, here's a simple, step-by-step system for actually placing the trade and managing it from start to finish.
Think of this as your pre-flight checklist. Step 1, wait. You do absolutely nothing until that momentum candle closes clearly outside the key level. Step 2, enter. The moment that candle closes, you're in. No second guessing. And step 3, which is non-negotiable, protect. You immediately place your stop loss just on the other side of the level that was just broken.
Okay, so you did it. You're in the trade, your stop loss is set, and the price is moving your way. Awesome. But now comes the next critical question. When do you get out? Where do you take your profits?
Remember, the whole reason we're doing this is to catch huge moves. So the absolute last thing we want to do is cut our profit short with a small fixed target. That would defeat the whole purpose. Instead, we're going to use something called the two-step take profit system.
Here's how this works, and it's pretty brilliant. First, you set an initial target at 1.5 times whatever you risked. When the price hits that target, you sell half of your position and you immediately move your stop loss to your entry price. Now the trade is officially risk-free. You've locked in some profit and you literally can't lose money. For the second half, you just let it run. You can use a trailing stop indicator, like the chandelier stop, which just follows the price up and only gets you out when the trend shows real signs of reversing. This is how you stay in for those massive home run trades.
Now, a common question is,
Why not wait for a little dip, a pullback, to get a better entry price? And it's a fair question, but here's the reality. The most explosive breakouts, they often don't give you a second chance. They just go. If you're sitting on the sidelines waiting for that perfect, tidy little pullback, you're going to miss the boat on a lot of winning trades.
So we've covered the how in a lot of detail, but to really build confidence in a strategy, you have to understand the why. What's actually happening behind the scenes in the market to cause these incredible moves? Well, it all comes down to crowd psychology.
The best way to think about it is like a domino effect. First, during that consolidation phase, buyers and sellers are in a stalemate. Then the breakout happens, that big momentum candle we talked about. That's the first domino falling. Now think about all the traders who bet the other way. They're now trapped and their stop losses start getting hit, forcing them to sell, which pushes the price down even faster. That's the next domino. Finally, breakout traders like us see the move happening and we jump in, adding even more fuel to the fire. It's a powerful chain reaction.
And this is such a crucial idea to grasp. A breakout isn't just lines on a chart. It's a visual representation of human emotion, the panic of trapped traders, the greed and excitement of new ones. And when you understand that, you're not just blindly following signals anymore. You're trading in sync with the flow of the market. And that brings a whole new level of confidence.
So there you have it. You've got the whole framework now. You know how to spot the setup, how to wait for confirmation, you've got a plan for entry and exit, and you even understand the psychology that makes it all work. The only question left is, are you ready to spot the next one?